Hey guys, Jack Gleason here, and I'm doing a new video series on just trading lessons. So at the end of the trading day, what I'm going to do is I'm going to review trades that occurred and talk about the scenario in the setup and how we can look to profit from those levels in the future. So the first lesson I'm going to go over here is in gold. All right, so gold, as we know, has, when we run into a 50% retracement long, a traditional, which is a low to a high, when gold runs into its support level, it then needs to confirm that support level. And the way it confirms that support level, and by confirming the support level, I mean confirming the upside target of the halfway back long. So the halfway back long was 1547.6. We were front run by 4 ticks. But how do we confirm that support level? Say you didn't buy that level. Say you had your order a little lower, you missed the trade. What do you need to do to get in? You need to break above the opposing 61.8. So you can actually see there's always two sides of the market. The 50% retracement is sold into. The 50% retracement is sold into, but then when we broke above the 61, if you're not long, what you're looking for is an entry into the long trend to complete our profit target. So you want to get long and possibly look for the full target at 1564. You do that after we break out of the opposing short, you end up looking for the next halfway back from that low. That next halfway back from the low, so we traded the halfway back of the full move on Thursday. We broke the 61.8 on Friday and then traded the halfway back long on Friday shortly thereafter the open. That gave us two profit targets at 1564. And in fact, we confirmed a third profit target by breaking out of the shorts and holding a halfway back long. We confirmed a third profit target based on the pullback. This was a holiday. We had a holiday session. But that gave us another profit target at 1564.7. So what we have up here is three profit targets, okay? When you complete three profit targets, I call these stacked targets. What you would anticipate is the series to continue. Now, what we ended up having is as we blow through profit targets, especially when we blow through negative 23% profit targets, super aggressive. You see this bid here? This is a very aggressive bid. When we blow through those profit targets, we have the potential of beginning extensions. Okay, and the extension, in this case, I'd like to look for the most recent extension. You could see there was participation on this extension. We defended the 61, and then we broke out of a new high, but we then defended this 50 again and again, and then we ended up breaking down. So the trend fails at highs when we hit this extension. Now, another thing that's important, guys, if we have three profit targets all lining up, so we had two basically at 1564 and one at 1564 half area, you want to be thinking, oh, maybe this is a level that we could reverse from, because this is such an important resistance zone. So I always like to look left of the chart. So first thing I'll do is just go to where that profit target is and then just draw a line across my chart and just see, hey, is there resistance there? And you know what? Sure enough, there's resistance here, there's resistance here, there's resistance here. You can see this level. So there was a lot of stops that kind of got triggered. But if we don't continue going straight up in a sequence, in this case an extension sequence, what ends up happening is we just, end up pulling all the way back down. Now, here's really the lesson here. If you see an extension trade after multiple targets hit, and you start seeing this type of consolidation, okay, this is a failed breakout candle. I'm going to go down to a smaller time frame. We're going to examine how this extension traded. We traded the extension. We had a failed breakout candle, traded the 50, couldn't get a new high, traded the 50, couldn't get a new high, and the whole time you see that this market is making lower highs and lower lows, and then we have the full breakdown here. This is the full breakdown, the complete failure of the trend, and that actually comes right at the European Open, which is in the middle of the night. Anytime we get a break of a trend, I always like to pay attention to, is there a halfway back short that was sold into? Okay, and there was a 50% retracement short that was sold into. This is very important. There was a 50% retracement sold into. If you did not take this 50% retracement short, that's okay. Get in the next move. We end up going traditionals to extensions. We trade them once to target, twice to target, 3 times to target. The 4th time, we actually consolidated. We hit it once at 4:40 in the morning. We had a retest going into the New York Open. First at 7:25, and then 8 o'clock, and then we blew out of profit targets. From blowing out of profit targets, you have a low-to-low extension, and just like at highs, when we failed our extensions at highs, we went straight back down. When we failed our extensions at lows, what did we do? We went straight up. All right, and that's going to conclude this lesson here, guys. Be aware of extension failures at the top of ranges and at the bottom of ranges. When we're breaking out to a new high, if extensions failed, that's a false breakout. If we're breaking out to a new low and extensions fail, that's a false breakdown. These are really good trading opportunities that are at the upper end and lower end of the ranges, and it's something that you guys should look for. And if you see it, bring it up. Let me know. Anyways, take care, and I'll see you guys in the next lesson.